Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering a question I see all the time in the Facebook groups and the YouTube comment section, and that is, if you had to choose just one broker to start your own dividend investing journey, what broker would you choose? So I thought this would be a good question to answer. And of course, the ultimate dividend broker that I would recommend would be M1 Finance. Now, that is what we're going to be covering in today's video. So if you are brand new to the channel, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And of course, if you have any comments, questions going over the stock market, personal finance, or just disagree with the video, find some other information, provide it below in the comment section. I always read and reply to all your guys' comments. And let's go ahead and get into the video. So I'm going to be covering 5 reasons M1 Finance was created for the dividend, with the dividend growth investors in mind. Now, this is one of the first brokerages out there that combined 5 of the best situations that you can get. It offered, number 1, $0 commissions on stocks and ETFs. Now, you may be saying, hey, a lot of other brokers already offer $0 stock, purchases on stocks and ETFs. But, taking a look here at the platform, what do I mean by these buys? So I have made hundreds and hundreds of buys here within the M1 Finance portfolio. You can see all these trades here, 15, 4, 2, every single week. I made 13 buys, 11 buys. Now inside of a traditional broker, these 16 trades right there alone, if I was trading on a traditional broker such as Merrill Edge, Vanguard, Fidelity, those 16 purchases at a commission cost of $5 per buy, that right there would charge me $80 just to buy into those stocks. I don't want to do that. M1 Finance goes above and beyond there. Now, kind of going back to Robinhood, Webull, and some of those other free brokers that allows you to buy commission free. What M1 Finance does above and beyond that, it allows you to invest in fractional shares. So taking a look here in an example, I had, let's go to a really good example here. So here in this week, I just had dividends paid out to me. I had $18.10 of dividends. Now, what could I go out there and buy with $18.10 if I had to buy complete shares? I could buy a stock, I could buy General Electric, I could buy Ford, I might be able to buy a couple other stocks in there. That was always a problem for me on Robinhood and Merrill Edge. I had $18 sitting in cash, and I was forced to go out there, find a stock that I could afford with that $18 because I didn't want it sitting in cash. I wanted it invested for me. M1 Finance, it allows you to have fractional shares. So with this $18.10 that I got paid out to me, I was able to invest it commission free, and 85 cents of it went into Kellogg's. 85 cents bought me 0.01439 of a share at $59.06. That other $17.24, that bought me 0.18156 share of Lowe's at $94.95. So those 2 points alone, $0 commission cost and fractional shares, that is a huge win over just about any other broker out there for especially dividend investors. Now, here, automatic dividend reinvesting. I got paid out $18.10, and those $18.10 went back into the portfolio. But there are instances here, such as currently here, I have $3.30 that I got paid out this week, but it didn't get reinvested right away. There is a minimum threshold in order to have purchases in your portfolio, so you must have a cash balance of at least $10 sitting in your portfolio before M1 Finance will automatically invest your entire cash portfolio, your entire cash balance. Now, you can fix this by, number 4, scheduling your own scheduled deposits. Now, this makes it really easy to stick to a schedule, stick to a plan. You have a plan that you should have created for yourself for your retirement. My plan here on M1 Finance is to max out the Roth IRA. So every single week here, going for the remainder of 2019, I am adding $115.38. Now you may be asking yourself, why $115.38? Well, $115.38 by how many weeks in the year? 52. That leaves me with $5,999.76. In 2019, the maximum contribution for the Roth IRA is $6,000. So my plan was to add $115.38 every single week scheduled automatically. I can just set it and forget it, and it's going to max out my Roth IRA for 2019. So scheduled deposits would be number 4. We already, maybe number 5, because we talked about the automatic dividend reinvesting. So here, by just setting, we could actually knock this down. Say you don't have $115.38 to invest every week. You could invest $10 every day. That way you're adding brand new capital into the portfolio, plus you're exceeding that $10 minimum deposit or cash balance. And by doing this, if you had those dividends there of, whoops, I'm jumping around here, of $3.30 sitting in cash with $10 going in every single day, that would be $13.30 of just straight money here that you could reinvest into your portfolio. So this $3.39 here, it's buying me Apple, 62 cents, Consolidated Edison, 89 cents, Lockheed Martin, 89 cents, and Altria Group, 89 cents. Now, it'll need to hit that $10 threshold in order to make these purchases, but say for example we did have another week here such as we had where I received $18.10, that would be a fractional reinvestment plan. So it would just reinvest into our portfolio automatically. Now, M1 Finance does this by looking at how you built your portfolio. Depending on how you built your portfolio, percentage-wise, M1 Finance will automatically reinvest your dividends for you, or you can come in here and be a pretty active investor. Sometimes I just set it and forget it. I don't even look at my portfolio. Other times I will come in here and I know that there's a discount out there, and I will specifically target specific stocks in order to buy them. And it'll kind of go against the equity percentages to the target percentages. And you can either set and forget it here within the M1 Finance portfolio. And if there's instances here where your current equity in the portfolio is sitting below your target percentage, M1 Finance, if it's doing automatically, it'll look through your portfolio. It'll say, okay, I have ABM here that is sitting at an equity percentage of 3.1% of 5% as the target. That's a 2.9% difference. And then it'll kind of continue scanning on and say, okay, I have a 3.4% equity of 5%. So between these two alone, M1 Finance would look at these and say, okay, this one is lower, it has less equity to the target percentage, and it would make a little bit of a purchase there of ABM. Now, it doesn't have like a set way of how many stocks it averages down on, but it'll add into normally about 3 to 5 different stocks here on its own, and it'll kind of increase your equity to kind of meet its target percent for that specific portfolio. Now, the last and final thing here, the benefit of the M1 Finance platform, and that is the fee-free Roth IRA. Now, what is the main benefit between the Roth IRA and the taxable account for dividend growth investors? So if you are buying within a taxable account and you're trying to set up a dividend growth portfolio, you're going to get $244. Depending on your size of your portfolio, you may get paid out dividends. I made $240 some back in 2018, and if this was in a taxable account, I would be going against the whole point of creating a dividend growth portfolio. I want my dividends invested, buying me back more shares in the market. I don't want to have to pay taxes on these dividends that get paid out. If I was in a taxable account, I would have to, I would get paid out $200, and I would have to go pay out 15% of, whatever tax bracket I'm in. I would pay 15%. That would be $30 gone right there of my earned dividends. Instead, I'm going to be tax sheltering all of my earned dividends within this Roth IRA. So year 1, I get $200 paid out in dividends. Year 2, I get $400 paid out in earned dividends. Year 3, I'm at $600. Year 4, I'm at $1,000. Year 5, I'm at $1,400 dividends, and this continues to compound year after year after year of tax sheltering and buying back more shares, which increase your dividend income for the following year. And then each of those stocks within your portfolio also increase their dividend year after year after year. And there's companies out there that have grown and paid out dividends for over 30 years, Johnson & Johnson and ADP and many others. As these stocks as you continue to hold these stocks over the course of your investment journey, at the age of 59 and a half, when your portfolio is generating thousands and thousands of dollars of just dividends per year, at 59 and a half, you're going to be able to withdraw 100% tax-free out of your portfolio. And guess what happens at 60? You have to sell off these stocks? No, you don't have to sell off anything in order to take advantage of those dividends. You're going to be able to withdraw those dividends tax-free. You don't have to sell any shares. That means that if you don't want to use all your dividends, those could buy back more shares. But if you're sitting at a portfolio that has $600,000, $800,000 of equity, but you're getting paid out $10,000 per month of dividends. I've seen investors in the Facebook groups that get paid out an average of $8,000 to $9,000 a month in just straight dividends. That's completely tax-free, and you're not selling off any shares in order to get that equity in your portfolio. You already get paid out those dividends that you're just kind of withdrawing tax-free. So that is all I wanted to cover in today's video. Quick recap. M1 Finance, number one, $0 commissions on stocks and ETFs. Number two, you get fractional shares, so $10 or more can be reinvested into your portfolio with fractional shares. Number three, you can set up scheduled deposits to meet your goals. Number four, by setting up scheduled deposits and having fractional shares, you're automatically able to reinvest your dividends week after week after week. And then number five, take advantage of the free Roth IRA, tax shelter your dividends, build up your snowball, and over the course of years, you're going to have thousands of dollars paid out to you in dividends. That's going to be buying back more shares. And eventually at 60, you don't need to live off the equity. You're going to get paid out thousands of dollars in dividends. And that is the whole point of creating a dividend growth portfolio. So that is it, you guys. Do you guys agree with M1 Finance being the current ultimate dividend broker? Let me know in the comment section below. If you are brand new to the channel, hit the subscribe button. If you did enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions, disagree with the video, drop it in the comment section below. I always enjoy to read all your guys' comments. I take the feedback, and that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.